welcome to this ET Now special. I'm Nayantara. Today, we're putting the spotlight on private equity and venture capital, the kind of role both of them can play in enabling growth. Indian economy of late has been largely supported by government spending. Private investments have not returned. Banks are continuing to grapple with a high rate of NPAs, and credit offtake has not been to the kind of level you would expect to support a burgeoning economy like that of India's. Enter private equity and venture capital. Jayant Sinha was here at this two-day conference. Now, Jayant Sinha, of course, had a very successful career in finance. He gave it all up to pursue politics. He speaks a language that the markets understand, a language the investors are comfortable with. I asked him the impact on deal activity and valuations in particular post-demonetization. Here's an excerpt of that exclusive conversation.
Alternative assets in India are doing extraordinarily well. As you can see, there has been tremendous interest globally in stepping up investment in India. We've seen, for example, the Canadian funds really build up their positions in India. When you speak to foreign LPs, when you speak to foreign investors, they like what they see in India, particularly post-demonetization, which of course has been a tremendous success here.
So foreign investors, you're getting a thumbs up from them on demonetization?
Very much so. Foreign investors are seeing that cash to GDP is coming down and tax to GDP is going up. And so as a result of that, they really see this as a very, very powerful structural reform for India. As you saw, the GST Council has largely approved the draft of legislation that has to be passed. So the very important structural reform associated with GST is coming through. So foreign investors are very excited about India, both on the public market side and on the private market side, which is what alternatives represent.
So the other thing I want to just ask you is that because you're talking about foreign investors and the tax to GDP going up, the Chief Statistician's Office has also come out with a 7.1% figure, which means we continue to be the fastest growing economy in the world, despite the opposition perhaps not liking it and raising credibility issues. So in light of that, have you got any feedback yet from the foreign investors?
Well, facts are facts. Everybody's entitled to their opinion, but they're not entitled to their own facts. And the facts are clear, and I think they have spoken, and they're telling us that what we have been doing in the economy, both in terms of the structural reforms that we have unleashed, as well as the kind of investment that government and private sector players are making, are really contributing to very strong growth. And with the global economy now beginning to recover, you know that capital markets around the world are doing well, that there is tremendous hope for stronger economic growth in America, and those trends seem to be well established, that this will mean excellent growth in India and, of course, much higher profits for us.
But Janet Yellen seems to have indicated we're going to see a rate hike in mid-March. We seem to be on, we've changed our stance as well. The RBI has done that. Could that go against us?
It depends on whether you have a glass half empty or a glass half full view of the world. I have a glass half full view of the world. If the Fed is raising rates, it's raising rates because economic growth is robust and the US is close to full employment. That's very positive for the global economy. It's very positive for us as well, because we are, of course, a very important trading partner for the US. So I see this as a good story.
One of the black holes in the economy is the NPAs. Do you think as that is continuing to be a huge problem and standing in the world of development?
We are, of course, working on all sorts of mechanisms to be able to address the NPA issue.
That's Jayant Sinha explaining why India remains the preferred destination for foreign investors, including private equity. I caught up with some of the country's largest deal makers and fund managers. The sense I got is the next big bet is on financial services. And why not? Banks' credit offtake is still not at the optimum level, and therefore private equity is sensing a big opportunity in financial services, particularly NBFCs.
We are sector agnostic, and at the margin, the way we therefore divide the world in the Indian context is look at certain segments that are interesting from a private equity perspective, certain that are interesting more from a credit standpoint. And if you break that down, for credit, we've been pretty active in healthcare and in education. For private equity, some of the more recent ones we've focused on have been financial services. We've done a media investment as well. And on a broader basis, I think the themes are pretty consistent. There is going to be more companies who are looking to divest non-core businesses, conglomerates trying to sell assets on the one side. And on the other side, there are a lot of companies looking to correct asset liability management. And therefore, if you focus on both of them, it's a sector-agnostic platform.
How would you react if I were to tell you that it seems, at least in real estate, where you were very, very active at one point, it seems like you have slowed down, where I would have imagined there could have been great opportunities that have been out there, and now you only hear about, let's say, a Blackstone or a GIC recently, or the CPPIB?
So in real estate, our strategy has been consistent in the past few years. We've focused on lending really to residential projects. And in the past about 2 years, we've done close to $600 million of transactions across about 15 situations in real estate. And that continues to be an interesting area for us, strong pipeline there. Unlike a Blackstone or a GIC who've chosen more to invest equity, our strategy is more credit-led, at least at this point in time.
Okay, so that's as far as that goes. You mentioned you like financial services and how there are so many distressed assets that are available out there. But isn't there a problem where the churn in management is not taking place? I guess maybe when the bankruptcy code is there full swing, the debt recovery tribunal is functioning the way it's supposed to. Is that when we're going to see players like you become very active?
Yeah, all of those are the right steps as we see it. I think in the long run, you'll have many things that you need for a successful distressed market. You will need the right vehicles. You'll need long-term capital. You'll need industry experts and management, recovery experts, so to speak, who can get into companies if needed. And in the medium term, it's really more about engaging with companies to understand whether you can solve problems prior to a crisis or post a crisis, which will involve dialogue both with companies, with banks and all stakeholders, and trying to see if we can pilot 1 or 2 transactions which are really interesting, show the resolution capabilities, and then scale it further.
How would you react if I was to say, haven't players like KKR and other global giants missed the boat of late, where you're seeing credit offtake being very, very poor, distressed assets out there, very high interest rates? Haven't you guys missed the boat?
I wouldn't call it that, because if you again think about how each of our pools of capital are positioned, the way to think of the broader India market is even now about 80% of primary credit comes from banks. 20% comes from non-bank sources. And you look at like markets like the US, for example, it's the exact opposite, where 80% really comes from non-banks and 20% from banks. And we are at the very inception stage of alternative credit growth in India, and we've been pioneering this whole strategy in the country. So incrementally, I'd suspect you will find many more opportunities on the credit side, which will scale up, both in terms of vanilla flexible term loans as well as more structured opportunities over time.
What about exits? You know, India is always seen as a market where exits are very, very difficult. Have things changed? What has your experience been like?
Our experience has been pretty positive. As you know, in the last, I'd say 12 to 15 months, we've had meaningful exits across 4 of our portfolio companies, adding up to over $1.6 billion. It's been our largest exit year. There is continued interest, as we see it, from strategics to invest in companies, from sponsors to invest in companies. So frankly, exit per se today is not a major concern.
You also in the news recently, you know, for some pretty cool exits, if I may call it that, very lucrative exits that you made, the last one being PVR. So can we expect you to make new exits? Is that on the anvil?
Yeah, very much. So a couple of my companies in the first fund have blossomed, I would say. They're getting ready for exit, so we are working on that. So
can you tell us which are these bloomers?
I cannot tell you, but you know, you called it cool. See, exit is also a very strategic activity for a private equity fund. It's not about somehow getting out of your portfolio company and realizing the money. You have to leave the investee company on a higher platform. So in PVR, although it's a listed company, we have been investors from our first fund and second fund. So taking some money off the table would have been good for our LPs. Mr. Ajay Bijli also wanted to divest a little bit. So we said that how do we combine the two and make it strategic for the company? And we brought in Warburg Pincus, who is yet another highly reputed long-term investor, and put the company on a higher pedestal from where they are as well. So I like to look at exit as a very important strategic objective, always remembering the objective of our portfolio company.
Correct.
And what is good for that entrepreneur in mind, and not just about taking money out for our LPs.
Renuka, if I'm not mistaken, you still have some stake left in PVR, right?
I have a lot of stake. So we have 14% stake, which is the same as Warburg Pincus, because I wanted to very clearly signal to the market that I'm not losing confidence in PVR. I'm not reducing my interest in PVR. So I didn't want to sell one more share, which will make me a smaller investor than the incoming investor.
So you and Warburg together are working on obviously growing PVR. Can you share with us what we can expect? What's on the growth plans? We've seen the PVR stock do very well since remonetization, if I could call it that.
Yeah. So PVR has an organic growth story, and Ajay and Sanjeev are in the media talking about their company. So we would continue to be highly supportive of their organic story. How do we increase the brand strength, So there are a lot of initiatives in terms of how do you become digitally more savvy? How do you engage with your consumers in a way that you can be connected with them, certainly once they come inside the cinema, but once they leave the cinema as well, and enhance the F&B offering as well.
So you're saying the focus is back on movie exhibition and maybe digital, but not in creating movies where we had seen the Bijlis also get interested in?
No, not at all. But they are doing interesting innovations on the border, I would say, like the Wakao initiative, where there is a crowdsourcing possibility. People can watch movies from a huge library that they have created. So you can you can place your intent for a movie which is not a recent movie, and if there is enough interest in the market, they will screen it for you.
And they've had a great journey inorganically as well, whether it's with Ad Labs or with DT Cinemas. And they're not exiting, because that was something else that we were all seeing in news reports, that they might be exiting altogether. Remember those reports came out that they might talking to the Wanda Group, etc.?
No, those were media speculations.
The other good investment, if I can call it cool again, was the Arvind one that you did.
Yes.
Are you still enthused by the retail sector at large post demonetization?
I will be enthused about the retail sector for the next 25 years, because I'm a very big believer in the depth of the Indian market. At the base, we have a good 300 to 500 million aspiring people who will keep climbing up the aspiration ladder and keeping the engine of domestic consumption kicking for a long, long period of time. And in Arvind Brands was uniquely interesting for us because of the width of the portfolio. So you're not operating only for, people who are looking at very high-end brands. So you have opportunities at the base as well through our unlimited offering, which is our specialty retailing, value retailing for a family store. And then at the higher end, you would have the Gap and the Tommy Hilfiger.
Yeah. With Arvind, you're covered by apparel. So, and you said you like the retail sector. You'll always be bullish about the retail sector. So are you looking at other retail companies as well?
So we've been, to be honest, we've been struggling with the food sector. We have not made any bets, but I keep pushing my team to come up with innovative ideas on what we can do on the food side. On the entertainment side, of course, we have done PVR. We have also done some interesting bets on the internet side. We have invested with a company called Fantasy Sports. So we are continuing to look at what is it that the next generation
Food should suddenly become interesting, because last year they eased FDI as well, right? So for a fund like yours, it becomes so much easier to invest in now, provided, of course, it's domestically manufactured.
Yeah, but we don't get the size and scale in food. I mean, there are exceptional stories like Balaji food wafers and so on, but we didn't have a play in them, and they don't need any third-party money anymore. So we are continuing to focus on that sector, but I also put the overall financial services and everything in the consumption bucket, because the opportunity is coming from younger India wanting to consume, right? Whether it's to buy a home or to buy a vehicle, or for consumption spending.
So NBFC is a very exciting space at the moment. Would you agree?
Yes, absolutely. And the whole evolution of the financial sector space, where, hitherto we had two buckets. We depended on banks and we depended on capital markets. Today there is a whole new range of NBFCs who are attacking the opportunity for SMEs, MSMEs, retail investors in a very disruptive way.
Would I be wrong in assuming you're evaluating options?
Yes, we are evaluating a couple of options.
Of listed companies? Or?
No, these are very small companies who are addressing this new opportunity in a different way.
And on that note, we're going to take a short commercial break. We'll be back in less than 2 minutes. We're putting the spotlight on private equity, venture capital, and finding out how they can be the next growth enablers. Welcome back. You're watching this ET Now special with me, Nayantara Rai. Today, we're putting the spotlight on private equity and venture capitalists. Can they fill the vacuum that has been created by banks that are continuing to grapple with NPAs and therefore credit offtake is not at the optimum level? What are the regulatory hurdles that exist? And is the exit landscape about to change?
I think we've come a long way in terms of the overall regulatory framework for private equity in the context of capital markets. SEBI has made a lot of changes, in particular on the OFS regulations, and those have led to a lot of exits in the IPO markets for private equity. In fact, I think almost half of the exits or IPOs in the last 24 months have had a private equity OFS element. So it's a healthy sign of maturation for the industry and the capital markets. So I think the two areas which have struggled for sectors have been infrastructure related or real estate. Both of those sectors, I think because of a variety of macro reasons as well, have struggled, which is why the investments in those sectors have also struggled. I think what we've seen in the last 5 to 6 years is that private equity investments generally have reoriented themselves with the overall economy mix. So if you look at 55-60% of the GDP now coming from services, so services such as financial services, the consumer sector, healthcare services, all of those have attracted a lot more investments, and we've seen a lot more exit activity around these. Coming back to the infrastructure as well as real estate sector, I think we have seen now increased activity coming back with a lot more maturity, a lot more evolved perspective, and those should have a better exit profile compared with the historical investments which still have legacy issues.
The deal activity on an absolute level, yes, if you look at volumes, is a little slower, but that's not really, I think if you look at total growth rate also, that's a little slower. But on an absolute number, the total number of deals done, the exit made, etc., is still very, very substantive. I think there's fairly good amount of activity. Now, as deal doers, we can always ask for more deals. But I wouldn't say that, no, that we are really slowing down much. As I said, minorly this year, the GDP is also slated to be slightly lower. Last time, I think 7.9. Is estimated to be 7.1. If you look at the total deal done around, they reflect a similar pattern.
So then what can we expect from ICICI Venture? If you're saying that, yes, deal activity is still very strong, do you have any fundraising plans? What's keeping you busy? So
ICICI Venture has been very, very active. We have done a lot of significant fundraising. If you look at last 1 year alone, we raised Resurgent Power Ventures along with Tata Power. We raised around $845 million. That's a substantive one. We have also been still raising, we raised around $320 million in IF4, which is our private equity one, and we'll continue to look. I think more importantly, besides this, we have something like $1.5 billion of India dedicated dry powder, which we have to invest, so that you will see this being deployed over the next 3 to 4 years overall. So you'll see strong deal activity on both the investment side, fundraising side, as well as exit side from.
So what are the sectors that are enthusing you? I'm also speaking to you at a time when it seems that we are seeing a bubble in the traditional e-commerce space. So what are the sectors you like? Should we go back to the blue chips?
Yeah, so we have a much more differentiated approach. We don't have one single fund through which we invest, right? So we have 4 different set of funds in different specialities which we do. So to look at the stress side, and let's say what the mezzanine side, etc., we have Aeon, which is our strategic partnership with Apollo. And we have nearly $1 billion of AUM there. We were still having around 400 million to deploy. So I think even if you look at stress or mezzanine or debt type structures, we have enough capital available. But if you look at growth side, we have a private equity growth side which is coming. If you go to the infrastructure side, then we are looking at the power platform.
No, but there is one space where clearly we will have to see activity at some point. For example, SBI has tied up as far as distressed assets go. You have Edelweiss with ARCs. Anything at ICICI Venture? I know you have, but it's not been active. What can we expect?
No, so we have been active. You must understand, we have also applied for an ARC license through the Aeon platform itself. So I think that license is under process, which is a clear commitment around the type of work that we want to do. And we have participated in many stress situations and actually done that. I think the real activity of resolution of real distress, NPA, hasn't really progressed much. We are still working with a lot of people in the current environment. We hope we'll conclude some deals very soon.
But with what has happened in the Kingfisher case, some people being arrested, the bankers being arrested, is that not going to have an impact on this resolution of NPAs?
We all hope it doesn't have much significant impact, because it is very important to release productive capacities and the resources of the nation which are locked in these assets. I think a market resolution which really gets the capacities back up again, where new capital can be injected, is in benefit of everything. Having said that, obviously, some of these things do slow down the decision-making process, and I think to some extent one can feel that.
So when you get your ARC license, for which you have co-applied with Aon, first of all, when are you expecting that license? And then what kind of capital deployment can we see for this?
I think it's still early. I think we'll wait for the license to come really and the thing get done. But I think there is no shortage of capital once you have a real good pipeline and a visibility to resolution and of assets. And I think these are early days, but I think if that model really starts working, I think there's a lot of capital waiting from global side to come into the picture.
And how is is it going to work at arm's length with the bank? And I don't ask you only as a representative of ICICI, globally and in India. For example, you'll have SBI and you'll have the ARC of ICICI and you'll have the ARC. Is it going to work at arm's length?
Okay, everything has to work at arm's length. We are managing third-party capital here, so every transaction has to be done. There is no necessity of working only with one set of people. So one can rest assured that all these will happen at very arm's length transactions.
How can we talk about private equity, venture capital, and not talk about startups? Is it a bubble that's about to burst anytime soon? We've read about Snapdeal laying off 600 people. We've read about the other startups that are also in trouble. The hype over valuations. How is all of that going to unravel? And what about the Narendra Modi government's Startup India initiative? It certainly hasn't been the way it was envisaged. In fact, the DIPP Secretary Ramesh Abhishek has admitted maybe it's time to even change the definition of a startup. Here's an exclusive conversation of the DIPP Secretary with my colleague Adrija Chatterjee.
We have got feedback that startups in subsectors like biotechnology and medical devices, they take a much longer time to do their work. So we are ready to look at the definition from that angle. We have requested the concerned government departments also to examine this and come back to us. See, nothing is cast in stone. If we get feedback that something needs to change, we will change it.
So you were also talking about including more startups in the tax benefit bracket, apart from the 10 that are currently there. So when can we expect some movement, and how do you think this will be beneficial for startups at large?
So what I mentioned was that we have the interministerial group which is there. They have recommended 10 startups for such benefits. And there is a general feeling that very few have been recommended. So we are happy that a non-official group also reviews those applications which were not found eligible and give us their feedback.
So, but if you talk about startups currently, there's been a worrying trend with Snapdeal recently laying off 600 employees. Do you think that the bubble has finally burst? Do you think the government could intervene in a way to ensure that the startups can do better, recover this trend?
See, we have a tremendous scope for promoting entrepreneurship in the country. We have a very young population, very smart people, very enterprising, innovative. So the government is creating the ecosystem for promoting such entrepreneurship and innovation. So, and all our actions are meant to do that. So that's what we are doing.
But sir, the startup fund, the amount of disbursement it actually went out with was 5.66 crores, and it was a 10,000 crore fund. So what stopped the government from disbursing further?
From fund of funds giving taking stakes in the venture funds and to the final release of money, it takes 2 to 3 years. So it's not that the government makes an announcement of 10,000 crores and it gets disbursed by March. And also the 10,000 crores are to be given by year 24-25.
There you go, the biggest of voices in the industry bringing you up to speed when it comes to private equity and venture capital. We've told you the top sectoral bets, regulatory hurdles, and all the challenges that are faced at the time of exit. 2017 has certainly started off on a promising note when it comes to mergers and acquisitions. Let's see though if private equity can fill in the vacuum that has been created by traditional banks. Many thanks for watching this ET Now special.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.